Hello everyone, George DeSantis here with the look at the market for the week ending Friday, October 26th, 2018. And as we usually do, let's bring up the disclaimer. I urge you to read it as usual and just note that this is not supposed to be professional advice because I'm not a professional investment advisor. So we'll start as we always do with looking at the broader market, that is a weekly chart of the S&P 500. So here's a weekly chart of the S&P 500 from TC2000, and you can see it's not a pretty chart. It's a waterfall here, downtrend, distinctly downtrend. The 4 EMA crossed below the 9 and below the 30, and now the 9 has crossed below the 30, indicating solid downtrend. So this thing could continue to drop further. There's no guarantee that it's going to hold here at the 618 Fibonacci retracement level. I mean, it's a common thing for retracements to stop somewhere in that direction, on that level, but there is no certainty. The other indicators, as you can see, the MACD histogram, after confirming this bearish divergence, as we've looked at for many weeks now, it's now crashed through the zero line and distinctly bearish. So what do we need to see here? We need to see, as we saw in this area here, we need to see the histogram trending up from below the zero line for us to begin to feel confident in trying to accumulate stocks again. But as of now, we got to be really careful and have some stop loss orders in, or at least know what our pain threshold is, so that we don't give back too much of any gains we might have had, or for that matter, lose a lot of money here. Look at the RSI 12. RSI 12 just broke through the 40% line, and that's significant. Notice all the way up it was above the 40% line. Williams percentile just broke below the 50% line, and I don't like that. I like 50% line. I want to see Williams above it. And the last indicator here, the sum of the rate of change indicator, just broke through a couple of weeks ago below the 4% line. So there is no doubt about this downtrend on the weekly chart. So here's a daily chart of the S&P 500. You can see the downtrend is so intense here, just as we did in the weekly chart. You can see all these moving averages broke down here and had a false rally and broke down again. And what do we see on the right side of the chart? Some interesting things. First of all, this is a bullish harami. There's a bullish bar, the body of which is totally engulfed by the body of this bar. So it's a bullish harami. Didn't really materialize in any real bullish action last week or on Friday, but on Thursday we had an interesting day when stocks seemed to have gained a bit here. But on Friday we have a doji, which is just simply signaling uncertainty, a sense of not knowing what direction this market will go, and generally we drop below the 200-day average as well, below the 50, below all these moving averages. So we need to see some bottoming action here. So we already saw get a little life, a little sign of life here with this bullish harami. Let's see if we could see some more action here that gives us some idea of a bottoming process. It's not there yet, so we got to be really cautious, as I mentioned a little while ago. Now, MACD histogram made a low here, and when it rallied with this false rally here, MACD histogram shortened up a bit. And then when we got this further fall again, this pullback, MACD histogram lengthened here again. Now, one might say that the bears were stronger here than they were over here, than they are over here. But it's not a classic bullish divergence of MACD. For it to be a classic bullish divergence of MACD, we need to see a lower low here, a low here, and a lower low here. And we need to see MACD break above 0 and then pull back to make a higher low. And then we would have a nice bottoming process. We'd have confirmation of a bottom from MACD, just from the MACD alone. Doesn't mean that there won't be other indicators that are giving us some contrary indications, you know. But if we follow MACD, which is a damn good one to follow, we need to see that. We need to see something like a bullish divergence, and it's not there yet. Looking at the other indicators, you could see they're in bearish territory. All three of these are in bearish territory. Now let's stick with the S&P and the general market. What you can see here is that this is the new high, new low index, and it's looking at the spread between number of stocks making new highs versus new lows. And we had a low, we had a low here, and we had a lower low here. And one of the things I'm observing is that there's a bullish divergence of MACD. MACD made that classic divergence here. So if that is any harbinger of things to come, hey, it may be calling a bottom to some extent. Well, the new high, new low index. Let's see what happens. Looking at some of these the stock charts, chart showing the impulse indicator, we can see that there's been nothing but blue and red bars here since we had this retracement. Right now, there's a red bar on the daily chart. So it's a censoring system according to Alex Elder. So we're not allowed to be buying stocks here. We're not allowed to be buying stocks on, at least from the daily chart. Let's see what the weekly chart looks like. Same thing. We're not allowed to be buying stocks here. That's so much for the for that indicator. Here's an interesting looking chart. There was a guy by the name of Terry Laundrie years ago. I used to get his weekly market summary, and he was very fond of this chart. It's the ratio of the FAGIX. He called it the faggots and the USTIX. So really, it's a Fidelity Capital and Income Fund versus a Vanguard Long-Term Treasury Fund. So it's basically stocks versus bonds. And interesting chart, you could see that this is a 50-day moving average. And since September of 2016, the ratio of these two funds have been above the 50-day moving average for the most part, or found support there. Right now, it's sort of like bumping down against it again. So it'll be interesting to see if we find support here. As long as we're above the 50-day moving average, usually the market tends to be in a bullish mode. So I thought it would be interesting to use Shaken analytics software for a moment. Take a look at the sectors to see which ones are performing well, and there are only a few, two of them actually, and you know what we can learn from this. So let's take a look at this. The first one we'll click on is utilities, and you can see from utilities when it comes up, it's above the 200-day average. It's got some pretty good money flow, and insofar as its relative strength is concerned, it's strong. It's pretty strong. And if we click on the next one, consumer staples, we'll see it's also above the 200-day average. So the stocks like Procter and Gamble would be part of consumer staples, I suppose, and that's been doing pretty well recently. Anyway, they came out with good earnings. So this is what we got. Now, when we take a look at some of the other ones, all the other ones, look at this. Most of them dropped, or I think all of them dropped below the 200-day average. So here you have this. This is the S&P. Look, you could see that characteristic drop there. Technology, similarly, you will see here we have below the 200-day average. So I won't worry to go through all of them. Suffice to say that except for these two, utilities and staples, the sectors are all down. They're all below their 200-day average. Not good. All right. And here's a list of stocks that I either own or used to own. I still own some of these. I still own Ross Stores and Apple and Adobe and Salesforce, Microsoft and Visa. But I have sold the other ones. But I'm watching these like a hawk because if it hits that 6% loss, I'm not going to stick around for much more of a loss. I'm still expecting this market to rally toward the end of the year. And, if I'm wrong on that, then I'll get out of the market as soon as these stocks pull back too much, if they cross over that threshold of 6%. I think I'm going to make it a little shorter today. That's the story. I still believe we're going to get a rally to the end of the year, and have a great weekend. Boston has just seemed to be too good, but LA turned the story on them last night. The game finished early this morning. I wasn't able to stay up for the whole thing. Have a great weekend.